The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray feeling good, Lewis. Well, folks, something big happened on Friday. Good Friday. The markets were closed, but the markets were open for Globex. I wanted to post this to you because I think this is something that it could mean the green lights are on for the economy again. All I can tell you is this market is very, very strong. You'll notice here that I've marked on the left side there the key time. That was around 9 o'clock in the morning Friday. That was in New York time, and we had the report came out, and the jobs report was we were back to full employment almost at 6%. They added 910,000 jobs or some ridiculous amount, and then a few minutes later, the market closed, and then it didn't open again until Sunday night. And you can see Sunday night we backed off about 17 handles down to about 40.21, almost making a perfect ABCD. But what I wanted to show you is you can see that through the rest of the evening from Monday early morning in London and where we are now, you'll notice we had a pretty nice run up. That was about a 3-hour run up. We got up to that 40.35 level, which was right at the 78% level, and that was right at our opening. And then, of course, we popped through the 40.38. But look what's happened, folks. We went 40.38, 40.48, 40.58, 40.68 on our way to probably 80.88. I don't know. The reason why I'm showing you this chart is because it reminds you, if you ever watch the movie Moneyball with Brad Pitt and Joshua Hill, and they're talking in the room there, and Joshua Hill says, well, we've got to fire this guy. Well, I don't know how to fire the guy. And he says, you walk in and say, hey, look, you've done your job here. You got to move on. Your career is over, whatever it is. It's over. You know, that's what it is. It's all about numbers. You're not producing the numbers, you don't get to play Major League Baseball at the show. And so Brad Pitt said to him, he says, which would you rather have? He said, would you rather be shot in the head and get it all over with? Or would you rather be shot in the chest 3 times and bleed to death over a 2-day period? And he said, yeah, I'd rather get shot in the head. And folks, if you are not using stops in these markets, you're bleeding to death. Let me tell you, folks, when you see these markets explode like you're seeing this morning, this is a very, very powerful, and I don't care what it is. It could be Reddit, Dudit, Waddit, whatever it happens to be, it's going. And you can't stand in front of it. You don't know who's out there. Not only that, but if you looked at what happened on Friday, I checked the open interest, of course, early Saturday morning, and sure enough, what happened? There was an increase in open interest in the S&P. Not in the NASDAQ and not in the Russell, but in the S&P, there was a substantial increase of about 1%, which means there was new buying coming in. And as you can see here today, the market has gone all the way up to 47. I don't know what the high is going to be, but this is an explosive move. Now, markets that go like this can end at any time, but you don't know when that ending is coming. You just can't stand in front of it. You've got to be able to tell yourself, look, sometimes I'm right, sometimes I'm wrong. And when you're wrong, you've got to get out of the way. That's the main thing that you got to remember when you're doing this. It's very, very important. I can't stress that enough. I keep telling people that. But, many people don't believe me. People believe they put their stop in and it's going to get hit because they're looking for their one-lot stop or whatever. Believe me, that has nothing to do with it, folks. These markets are huge now. Look at the volumes that we're running through here. You don't have to stand in front of that. Now, something else really exciting happened here. If you'll take a look here, I'll do the U.S. dollar and the euro. That's one of our key things today. But let's take a look here at the NASDAQ. The NASDAQ at the end of the last week, you see we went down to that 61% retracement. We had a Gartley there, 12,600. We're now trading at 13,005 something, whatever it is today. We went up to the 78% level of that move from the other day. The ABCD on this measures a little bit higher. So this one is these are lagging the markets a little bit, but they're really strong. You can't stand in front of it. That's the main thing. You've got to find some place where you've got a really good spot, to say, okay, if this is it, I think this is going to be the top. Yeah, then you do that. But until you have that spot, there's no reason to stand in front of that. I hope this makes sense, because I think it's really important that you've got to use stops during these types of markets that we're watching here. Now, we're having a big move here in copper. We focused on this in the newsletter over the weekend, the fact that we had gone down and held the 61% retracement there at the 393 level. And as you can see here today, we gapped above that trend line almost. I mean, yeah, we did actually gap above the trend line there at 401. And now we're trading up around the 415 level, just challenging the 61% retracement from the high that we made way back in late March. So the copper is extremely strong, and it also is being influenced by increasing open interest. I've been asked to comment about the copper market from Australia. I don't know anything about the copper market from Australia other than they produce a lot for China, and frankly, folks, that's the extent of my knowledge of it. But I really don't need that much knowledge on that, because I'm a technician. I'm seeing this from a technical standpoint, and that's what I look at. Neither here nor there. That's all I'm really looking at. Nothing more than that. Now, I want to get to the grains here in just a little bit. And Jeff Huge from JWH Financial Investments has been on before as our guest. He's beaten the S&P by about 50% so far this year, so he will be our guest on here at the break with his Alpha Investment Group. And then tomorrow we will have John Person on, from my old buddy from the old Chicago Mercantile Exchange down in Florida. He told me today he was 60. I said, gee, I have a cat 60. Wish I was 60 again. No, I don't. I don't want to be 60 again. I like right where I am. I'm at the 8th furlong pole and loving it. All right, let's move on here to one other one that I wanted to mention. And since we're talking about the U.S. dollar, let's get this up here so that we can take a quick look at it. This was a really interesting one that we brought to your attention last week. If you'll remember here, last week we were setting right at the 78% retracement of the high that we made back in September. That was at the 93.40 level. And for the last 4 days, you see we've been backing off quite a bit, which told us that maybe the euro was making some type of a small bottom. In fact, it might be a small bottom. It might be a large bottom. We don't know. All we know is that that's what's happening. And then today, if you would have came in and started looking at the euro, you'll see over the weekend, during the time the market was doing some trading, you'll see that the market pulled right down to the 61% retracement there at 117.40, and we've blasted through the 118.30 level. It's up about 90 pips already today. So that tells you that euro has made some type of a bottom, whether it's short term or long term. I don't know, but nobody else does either. What we're focusing on is how much you have to risk, to see if you're correct. That's the main thing. I will cover, we've got a break coming up here, but I will cover the gold and silver here. And when we get back from the break, I'll be happy to do that. 877-927-6648.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Folks, I posted that chart of the dollar index daily up again because you can see the 61% retracement, then you can see the 78% retracement. Sure, that's really great. But if you take a look and just, like Twentyman says, defy human nature, do the work yourself, go look at the time counts that it took from low to high and see how close they are to within one day. I mean, you don't have to worry about fundamental information and stuff. If you're looking at something like this, it's going to tell you you're at a spot where, yes, this may or may not bring something in the future, but this is the best information that I have. I mean, it's got to be better than the information you're getting from the news and stuff. I mean, who knows that? I mean, look what's happened to our economy, folks, in 72 hours. From Friday, a little more than 72 hours. From Friday, we went to 6% unemployment. We were at 25% unemployment back on March the 23rd of last year, and look where we are now. Maybe this whole thing is going to be a blessing in disguise. We've got rid of people that were on marginal basis, whether they're getting money from the government or not, I don't know, but this might be a sign that the market's going to explode to the upside. We don't know that. It's certainly exploding to the upside today, but that's just the thing that you have to pay attention to. The main thing is when you're watching these folks, there's nothing wrong with trying to pick a position, anything, whether you're long or short, you can do any trade you want. But the one thing that you have to do is you've got to ask yourself before you put the trade on, how much am I willing to risk to see if the darn thing's going to work? And that's what the whole thing of trading is all about, because you do not know what's going to happen next. This market today could reverse itself. I know it's not going to, but it could reverse itself and give most of it back or even all of it. You don't know. We haven't seen a day like that in years, but that could happen. I mean, it's always the possibility. Now, since we're on that vein, I wanted to talk just a little bit about the grain markets, because we're seeing signs that the grain markets are giving a little bit of a stagnation problem here. Here's the soybean market here. This comes from our good friend Rich. Just a second here. We'll get this up here. You'll be able to see it. What this is doing here is it's comparing the soybean market for between 2020 between the old crop and the new crop. The one on the bottom is the new crop soybeans that are being planted pretty soon or now, in some cases, and then the top one is the old key. Now you notice here that they both made new highs on this run, but they both came back very, very quickly. The reason why that's important is the fact that it did it with the most bullish possible news you could have gotten on a crop. I mean, they basically said the only beans that are going to be available are in the Smithsonian. The same thing was true of the corn. So that's a first sign that there may be something wrong in the grain markets. Now, we were up sharply earlier this morning, and now they've backed off a little bit more. They're still up, but anywhere near that. So we're watching for a possibility here because two reasons. One, we might have enough of a trading opportunity to the downside, which we certainly could see, but we're also going to be watching for a buy point, especially in these November beans coming out here in about a month, because we have to have an absolute perfect year in weather for this bean market to stop going up. I mean, it literally has to be perfect, and they grow every bean that they've ever wanted to, and they've increased the acreage and stuff. So our job is to find a spot. We're saying, okay, this is where we think we've got a tradable opportunity, and that means how much money do we have to risk to see whether we're right or not. That's the main thing of watching. Now let's take a quick look here at the corn. The same thing here is what's going on in the corn market. You'll notice on the left side, you have July corn. That's the corn that's in the bins right now. We're selling July corn. It's already been, produced and everything. But look at the comparison here, folks, between the 2020 year and look what happened in 2004. In 2004, we had the same type of really bullish, fundamentals. And look what happened. They dissipated and people stopped buying corn because it was too expensive. And then it dropped $2 a bushel, and then everybody wanted it. So you've got to find a spot here where you just can't get locked up too much. Now, Mr. Z has been incredibly bullish. The copper, God bless him, he's been talking to us about that. We posted did I post the copper chart? I believe I did. Yes, I did post the copper chart. And now we're coming into that. Let's post it again just to be safe here. We'll get this up here and we'll be able to see it. You'll see that we're back up to that 61% retracement there in the copper again. If copper breaks above the 420 level, that's going to be a really valid breakout. So those are a couple of things that we're watching. But it had a really good pattern, for support down there at that 398 level. And now we're 20 cents higher and everybody's seeing it. Well, you got to try to see it when it was down there. Look how many times we hit that bottom in the copper, too. We hit there 1, 2, 3, 4 times. Exactly at the 61% retracement, just under $4 a pound, telling you that, there was some people willing to come in and to buy this. Someone's asked a question, am I bearish the grains? No, I'm flexible in the grains. All I'm saying is the fact that we had an incredibly bullish report, folks. The grain report that we had was just as bullish as the report that we had Friday with the employment numbers. I mean, 6% unemployment. Can you believe that? I mean, with all the restaurants and stuff that are closed, I question that number myself. But if the market doesn't have to question it, folks. Look what it did. This was on Friday when most of the everybody was not conceding that we were closed on Good Friday, but you can see here we went from where we closed on Thursday night. We were at 40.20. This was on Friday, closing on Thursday, and then Friday when it opened, we were trading around 40.20, and that's what happened. The market, this was Friday morning when the Globex was open. It moved from 40.20 all the way up, moved 20 handles all the way up to 40.39, and then over Sunday night it comes all the way down to 40.21, and now it's at 40.68. That's not it. Mr. Z has said he has Mr. Z, I wish you would call in and tell us what you think, because from what people are telling me, Mr. Sy and Mr. Rich are saying this is a really bullish report. But boy, I tell you, the market's not acting as that bullish. I hope you can call in, Z, because I would like to get your opinion. Everybody respects it because you've been nailing these markets left and right. You have to come in tomorrow, though, buddy, because we've got Jeff Huge from JWH Investments coming up, and he's got some really good technical stuff. He's a pure technician, and it'll be fun to watch to see what Jeff has. So thanks, Mr. Z. We'll have you back in. That's when we'll have copper. You can talk to us at copper when it's at 440. So that's another one that we want to watch very, very closely. So S&P taking a quick look here of what we've got going here. We've got the gold is about unchanged on the day, and we've got the euro still moving up strongly. S&P's making new highs on the day here at 40.70. And what do we have here? The gold, corn's not doing too much. Crude oil's getting hammered again, folks. That's been a major top up there at that $68 a barrel. We're now $10 a barrel under it, folks, at 58.43. That's $10 under where we were just about 4 weeks ago. So that tells you that there's some type of a correction going on. Now, this is where the stock market is the only one that never corrects, but unfortunately, that's the one that's going up. And if you're long, stay long. 877-927-6648.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Jeff Hughes from Minneapolis, Minnesota on the line. Jeff, how are you?
I'm well, Larry. How are you doing?
Just living the dream, my friend. Just living the dream. Listen, thank you for joining us. And hey, congratulations on what you've been doing in the markets. I mean, you're beating the S&P 500 by quite a bit. I don't want to spend any more time giving you too many accolades, but you let it go to your head. I can understand that. But I posted your chart of the stock market that you're looking at here in the S&P 500 on your wave counts for the Elliott. You want to tell the folks what you're looking at here?
Sure, happy to. So, we're looking at two different counts. The first one on the left is what I would call cycle wave 5, and it's a 12-year time horizon that you're looking at. The advance actually started off the 2009 low, so at the nadir of the great financial crisis, we came out of that, and that's what we would have called cycle wave 4 ending. And so this whole move up since 2009 has been cycle wave 5, and it's subdivided a number of different times. As you can see, there's primary wave, which is kind of the 1, 2, 3, 4, 5 in brackets. Then there's smaller degrees all the way up. And so where we're at right now is we're kind of in that final leg. And if you move over to the right-hand side of this chart, you can see the last 12 months kind of zoomed in. And that's what we would call primary wave 5. So we're in the wave 5 of 5 of 5 of 5. This is the final move up of a major bull market that started 12 years ago. And so our view is that, it's not over yet. There's a lot more to go. We think something like 18% upside to get to our target, which is around 4,600, give or take. We came up with that target using, a variety of different measured moves. We're using Fibonacci sort of extensions as well as, a general sort of measured move on the breakout to new highs after we took out the 2020 level that kind of marked the February 2020 high before the March crisis. And so, we've got a lot of confidence that target's achievable in the next, really, inside of 12 months. We think this year, possibly as early as August.
Jeff, we got a question for one of our listeners. Is do you see any reason for this explosive move that we're seeing? Is it because the question they're asking, is it because of Reddit or all these people with GameStop that are all, together on the social media? Is that all part of it, or Robinhood? What do you think it could possibly be?
I think it's earnings. I think the reason stocks go up is because they're profitable. And if we look at the market as a whole, and we step back and take a look at what happened last year in February through the lows in March and the rally out in April, that whole big move was a complete wipeout of earnings because of the pandemic. And what we've basically done is we reset expectations down to zero effectively. We reset operating margins to their lows. And now a lot of these highly cyclical companies have extraordinary operating margin. And people might be concerned about, the government bailouts, free money being delivered by mail now to everybody. But that's all part of it. And maybe, what's going on the Wall Street Bets website is just, people who have never participated in the equity markets, at the margins making speculative bets with their free money from the government. That seems to be a narrative that's going around. In our view, that's a very small part of the whole thing. I think we've got a major earnings expansion and a major economic expansion underway. And what I would probably point to most is that the street is underestimating the earnings power based on the economic recovery that we're seeing. A lot of economists are looking at, economic growth kind of being in this 5% range. The Fed even raised their estimate to 6.5%. I think it's going to be more like 8, maybe even higher than that, possibly as high as 10. So if we get 8 to 10% GDP growth, real GDP growth in the U.S. this year, I think S&P earnings are going to be north of $200, probably around $210. That's our formal estimate. And if we get that, then the market's really not that overvalued, even on this year's earnings. I mean, we're talking about, 18 times earnings, 19 times earnings. I mean, that's not unusual. And, we think there's a lot of opportunity in the market right now.
Well, there certainly seems to be. It goes up all the time. One of the things I heard on Bloomberg is, in fact, one of the reasons why this was so good is because the companies are down to bare bones as far as their expenses. And so anything they make, their dollar is much better. Now, you've got a chart up here on KLA. You want to tell the folks what you're looking at here?
Well, what we're looking at is a company that makes semiconductor equipment. So the machines that make semiconductors, you may have heard this on the news that there's a shortage of semiconductors, and it's actually inhibiting auto production and really most major technology production has been impaired. In other words, they're not able to manufacture at their maximum output because of the shortage of semiconductors. And so we just got an announcement about a week ago from Intel that they decided that they're going to start making their own chips again. They used to outsource this to the big foundries in Taiwan, right? And so now they're investing in factory production here in the United States again. And KLA is one of the companies that makes the machines that are absolutely necessary to facilitate that. And I don't think Intel is going to be the only one. I think there are going to be a number of big semiconductor producers or semiconductor companies that get into the production of chips again as opposed to just the design. And bringing that back to the U.S. is going to be a big, important part of the process for KLA. Other companies like Applied Materials, which has had a pretty big run, and I think KLA is just kind of lagging that a little bit. It's the second fiddle in the orchestra, and now people are paying attention after Applied Materials had its big move. So I could see the stock making a pretty big run to around 400 to 410 range. We put a target out there of 405. I like to use a stop loss whenever we're trading a technical strategy, and the stop loss I have is about 327, and that's about 2 average true ranges below the entry price, which would actually be the stock's up about $10 today. So, it's about 50, or I should say about $25 below where the stock's trading right now.
Wow. We have a question from one of our listeners. If you can answer part of it, then we'll have you back at the break. But is the COVID-19 vaccinations affect this at all? Or I know you are a technician, but are you watching that at all?
Of course, yeah. That, in fact, is probably the piece of news that turned us bullish. As you recall, last time we spoke was last October, and we were still kind of on the fence. We were looking for this potential binary outcome. And then on November 9th, we got the announcement of the Pfizer vaccine being approved, and the market broke out. And I think everything that's happened since then, we've seen, a very efficacious sort of impact of that. And I think that's really what's driving the recovery.
Can you stay with us for another segment, Jeff?
Sure.
We'll be right back, folks. Jeff Hughes of Alpha Investments. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Okay, we're back, folks. We're speaking with Jeff Hughes out of Minnesota, good friend of Rich Anderson's. Jeff, the question that I have, one of the listeners is asking, do you do any algorithmic trading? Do you have these signals that you're looking at? Are they automated, or do you do that at all?
Being automated, but our algorithms are basically just a process, and we have a process that we do based on our experience and ability to identify patterns. And so rather than relying on computers to do it, we do it by actually examining charts and identifying levels and making decisions that way.
And you're a pure technician, as you've mentioned to me several times.
I am. And as far as making investment decisions, I use technical data as the drivers for my buy and sell decisions, but I do use economic factors and fundamental factors to kind of get a macro backdrop. Everything's kind of got to be in alignment, I think.
Well, that's good. Market feedback is very important, because when you see the news come out on some of these things, the thing Friday with the report, I was even shocked, and I'm not easily shocked when they said that we were 6% full employment. I said, oh dear, that's a little different than we were a year ago at 25%. So
no doubt,
no matter what happens. We have another question. Do you follow any of the major commodities like gold or silver or crude oil, anything like that?
I certainly follow all of them, actually.
Any of those that are interesting right now? We've had a $10 break in crude oil now. We've gone from 68 to 57, so it's looks like it's heading lower. What's your feeling on the crude oil?
I think the crude needs to hold 55, but it's probably range bound for a while. We had a pretty big move off that $35 low back in the summer. And I think we're just kind of consolidating here. The next big move, in my mind, would take us up to around 75. So we'll have to break out for that to happen. But I think some consolidation between 55 and 65 is reasonable.
Well, that's pretty good. And let me ask one other question before we can get to how the folks can reach you. What is your feeling on the yellow metal, the gold? What is your...
I'm not a big fan right now. I see there's a lot of merit for gold above 1850, but as long as we're trading below 1850, I'm on the sidelines here. There might be a trade developing here on a breakout above, say, 1775 to get to that 1850. But I think I'd just leave that to people that are smarter and more nimble than me, and I'll wait for the real big move to materialize. Once we clear 1850, then I think we've got a lot of runway, but you got to get there first.
Okay, you opened it up when you said more nimble than you. The question is about nimblicity, I guess, is cryptocurrencies. Any feeling on Bitcoin? Is it a fad?
I'm very bullish on Bitcoin. Okay. I have a 73,600 target. I'm also even more bullish on Ethereum. I have a $2,750 target on Ethereum.
Wow, that's good. So you think it's for real then? This is not a .com type bubble that we're seeing here in the cryptos?
I don't know if it's for real or not, but I do know this. It trades on technicals, and I have an edge there, and I can read the prices well enough to know that I think there's a very high probability that the price of Bitcoin gets to 73,600 before a problem ensues.
Wow, that's really good to know. Now, I'm going to give you a little bit of time to give a little commercial to your website. I posted it in there, Alpha Insights, your LinkedIn. And so you want to tell a little bit about how the folks can reach you, Jeff?
Sure. Best way to get a hold of me is my website, jwhinvestment.com. But you can also find me on Twitter under Alpha_Insights. I'm also on LinkedIn under Jeffrey W. Huge CMT, and I'm also on the Trade Exchange app under Alpha Insights. Alpha Insights is my publication, so you can always find me under that.
And also, you did a great presentation for stock charts this past week. People want to go to YouTube and see that because you did a terrific job. I happened to see that. That was very good, and I think it's because you are technically oriented, and that's what we like to look at here for sure. Listen, we want to thank you for being on a guest. We'll have you on next month when we hit 73,000 in Bitcoin, so we can put out the accolades for you, and we'll see what's going on. Hey, thanks for joining us, and tell Rich I said hello when you run into him, okay?
Will do. My pleasure. Okay. Thank you, Larry. Take care.
Thank
Bye-bye.
you, Jeff. You bet. Jeff Huge, folks, of Alpha Insights out of Minneapolis, Minnesota. And we are still jumping around here with these markets. I've had several questions about the comment that I made about the grain markets, folks. All I'm doing is watching them short-term for a short-term entry. That's the main thing that I've been watching, and that's what it's all about, folks. It's about the short-term entry, because if you can find those, then you're going to be okay. Now, if you remember, just about a month ago, in fact, it was back on March the 5th, just about a month ago today, we were looking at a situation in the crude oil market where we're having a 3 drive to a top pattern up there at 68.30, I believe, was the actual number. Now we're trading below 58 today. You'll notice here we had the ABCD retracement up there at the 50% retracement at 62.40. We're now $4 under that, and it looks like we're heading, like Jeff said, probably down to that 55, 56 level, which would complete the ABCD of this smaller range in here. So that's been they've really torn that market apart. And even though when it was at the high, it looked like it was headed for 75. Everybody was given a target for 75. So that's how these things turn, folks. So you got to be. It's not about how much money you make; it's how much money you don't lose, and that's what you try to do, is to keep that factor in mind. Now, I wanted to spend just a little bit of time here about the gold and silver. As you know, we've been very bullish gold and silver. We've had a tremendous move here of $70 an ounce in the gold market. We bought the silver, of course, at 23.85. We got out of it on Friday at 25.13. We're waiting to buy the gold and silver on a pullback. Right now we're trading about 17.29 in the gold. I'd like to see the gold get down somewhere around 17.05. I believe that'll give you a pretty good chance to maybe enter it, especially if it does it, in the ABCD format, because those are the things that you can rely on, to make you see if it's going to be the case. So we'll just watch that as we. That's another, and silver, of course, we could get back to the 24.50 level without any trouble at all. That's another area to be watching in the silver. Regarding the copper, folks, we'll be updating the copper tomorrow. because it's going to be right up against that big 61% retracement up there. I don't know if copper has hit 420 yet today, but 420 would be a very interesting spot here, because if we break above 420 in the copper, that would be a breakout above the 61% retracement after hitting the downside 61% retracement 4 times. So that's a very, very powerful one. So let's keep our eyes on the prize, as they say in the trade. When we come back from the break here, I'm going to have an interesting human interest story that I think you might find interesting, because it is human interest. So we'll see whether it's going to be any good or not. Okay, we'll be right back. 877-927-6648.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Okay, folks. Saturday morning, I get up and I remember the big Memorial Day because of the fact that my little sister had a baby back 56 years ago, and at that time, she was was in Germany, and but the most important thing was I got up and I told Sarah something about my grandfather, the fact that we had gone up to Arlington Park racetrack. And when I was just a little kid, I think I was 12 or something, and about the story of this horse called Silky Sullivan, who ran from dead last. He was 57 lengths back and came back to win the race. And my grandfather told me, he said, well, if you ever at a racetrack and it's wet, and the horses are, in the mud, he said that's an unknown factor. And anytime you have an unknown factor, that's going to make the odds go up. So Saturday was the Wood Memorial, and I saw this, and it was wet, and I saw the leading jockey riding a horse at 50-1. So I couldn't get there because it was 40 minutes to get to the track. I couldn't get there, so I called at the dog track here where we make our bets, and I talked to Kim, and I said, Kim, can you make a bet? She said, well, I can't make a bet for you. I'll lose my job. I said, well, bet $2 across the board on number 3 in the belt for the Wood Memorial at Aqueduct. She says, oh, I can do that. She says, I've got $10. So she bet $6 on the horse. Folks, you won't believe this. You have to go look at it, but go to Wood Memorial 2021 and watch the race, because at the top of the stretch, you're going to see a horse that is not even in the picture. He's dead last. He's 22 lengths behind with about 200 yards to go. And, folks, he wins the race by a nose at 72-1. And Kimmy won $377, and she was happier than a pig where. And the old cowboy sitting here laughing and smiling, saying, well, I missed this one, but I'll get the next one. So it's not about how much money you make, folks. It's about how much money you don't lose, and that's what the key to this is all about. We'll see you on the flip side tomorrow. We've got John Person on, a good old friend, great technician. We'll see you all tomorrow, folks.